Have you ever had the thought of, this stock will definitely continue to rise, I have to buy it quickly, when you see a stock's price skyrocketing along with an increase in trading volume? However, many investors overlook a very important question: are institutional investors selling off large amounts of the stock behind the scenes of this price surge? If you haven't paid attention to this issue, you may find yourself trapped at some point in the future, which can result in significant losses. However, don't worry, this video will tell you how to identify the signs of institutional investors. In the stock market, the surge in trading volume is often seen as a signal of institutional investors selling. Specifically, when a stock rises significantly while trading volume increases, it is likely that institutional investors are selling off large amounts of shares, rather than individual retail investors buying in. This means that once institutional investors complete their selling, the stock price is likely to plummet, resulting in significant losses for investors. Let's take Tesla as an example. During the period from July to August 2020, Tesla's stock price skyrocketed from $250 to $450. As expected, Tesla's stock price soon experienced a sharp decline after reaching its peak, plummeting from $450 to $330, a drop of 27%. If you could have recognized the huge crisis indicated by the surge in trading volume, you could have left the market before the stock price collapsed, avoiding losses. Let's take a look at another company, Netflix, in addition to the Tesla stock we just mentioned. In September 2011, Netflix announced the cancellation of its DVD service and launched its streaming service, causing its stock price to skyrocket. Subsequently, the company's trading volume continued. However, some investors at the time noticed that something was not quite right with this surge. Despite the continuous increase in trading volume, there was no clear change in the upward trend of the stock price, indicating that the big players were selling heavily. As expected, with the main players completing their sell-off, Netflix stock price experienced a crash in October 2011. The stock price fell 60% from its peak, resulting in significant losses for many investors. Therefore, if you can identify the huge crisis predicted by a massive volume increase, you can better grasp investment opportunities and avoid major losses. Of course, a huge volume increase does not necessarily mean that institutional investors are selling off their positions, but it is certainly a signal that investors need to pay attention to. If you want to earn steady returns in the investment market, you need to learn how to identify the signs of institutional selling and avoid getting stuck. Now let's do an exercise together. Please open the stock that you hold and check its trend in recent months. Have you seen situations similar to Tesla and Netflix stocks? The trading volume keeps increasing, but the stock price doesn't show an obvious upward trend. If you have seen this situation, please share the name of the stock you hold in the comments, and let's discuss it together. Being able to identify the signs of institutional investors selling is a crucial skill for investors. If you notice a situation of huge volume increases while stock prices remain relatively unchanged, it's important to closely monitor the stock's movements and exit early to avoid losses. If you enjoyed the content of this video and would like to learn more about the stock market, please subscribe to our channel for more valuable content.